Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, the stock market has started what I call distribution. It started profit taking, right? Remember towards the end of the year how we ran up and we got those record highs on the Dow, record high on the NASDAQ, and this created big bonuses for Wall Street. When they run it up and on a record high, the bonuses are multi-million dollar bonuses and Wall Street was happy. But now the distribution's taking place, the profit taking, if you will. Now the NASDAQ is taking profits the most. It's already dropped below its 10-day, dropped below its 20-day. Now the S&P has come down and it's sitting right roughly on its 20-day. But distribution has started. Now how much distribution is there going to be? I say that S&P will probably drop about 9 or 10%. Okay, that's just a normal correction, a normal pullback. But here's the thing. I'm surprised the S&P did not get up to a record high. It still may get pushed up there before the complete distribution takes effect. The record high, 48.18, we're about 100 points below that right now. Now, will we bounce up and hit that 48.18 and then the distribution starts? We'll see how that plays out, but the distribution has definitely started in the NASDAQ and probably will on the S&P continue. Okay. All right, so let's get over to the real estate market now. Now, I mean, the articles are always fascinating to me, right? Okay, here was the headline. The headline said that mortgage rates are plummeting. They're just plummeting. And they also said that home buyers would be well served to leap into the current market. This is what the experts told ABC News. Okay, well, that's fascinating to me. They're saying that home buyers would be well served if you just leap out there and buy a house right now. Now, I'm not sure the person that wrote the article really knows what the word plummeting means. Plummeting, we were at 8% and now we're down around 7%. I guess that's a plummet in some people's minds. Me, it's a 1% drop. Now, what's fascinating, as the rates went down by 1%, you know what dropped by 10%? Mortgage applications. Mortgage applications came down by 10% during the same time it took rates to come down 1%. Now, as rates went down, when you think more people are buying homes, when you think mortgage applications would be up at least 10%, but it's down 10%. Even though rates have dropped by 1%, the mortgage applications have dropped by 10%. No one's buying a home. You see, what people don't grasp is that the interest rate is not the problem. Now, I could argue that interest rates are at 0%. Look, you got a 7% mortgage rate and you have basically a 7% rate of inflation. You go on shadow stats, the real rate of inflation measured like it was in 1980, running about 7%. Now, of course, the government's going to tell you that inflation number is down around 3%. And we're going to talk about that because I think it's going to start to spike up higher from here. And I think we're already still around 7%. So mortgage rates aren't the problem, in my opinion. Mortgage rates are relatively inexpensive. That real rate on a mortgage is right around 0%. And that's very cheap money, right? But here's what's in a bubble. The prices. It's the prices. They got to come down. They got to revert back to the long-term average, revert back to the mean, if you will. And that's about a 40% drop from here. Now, how long that'll take to play out, I'm not really sure, but we always revert back to the mean, and sometimes we overshoot. Now, today, well, let's call it Friday, the first Friday of the year, and I just got to start off with talking about the scary stuff, You see, what we got going on is a grand illusion. It's a grand illusion. Look at the stock market. It's at a record high. Look at the real estate market. It's close to the price that Billy Bob got out at. This is just an illusion. This is just an illusion of the printed money. We printed money beyond belief, right? Okay, I mean, basically, the United States, I hate to say it, but they're really running a Ponzi scheme, if you will. Okay, now there's 130% the debt to GDP ratio. Okay, no country's recovered from 130% without either defaulting or hyperinflating. And we're going to go the hyperinflation route. We're going to print money, and we're going to print that money into oblivion. Right now, we have an inverted yield curve where the short end is higher than the long end in interest rates, right? Okay, like the short end, okay, that's up at 4%. The long end, maybe down below 4%. So it's going to reinvert this year because the Fed is going to come out and they're going to lower the interest rates, right? They're going to lower the short end of the curve. They're going to bring it down. They're going to cut interest rates. They say 3 times. The market's expecting 6 times, but it's going to lower the short end of the curve. Now, I don't think the long end's going to care. I think the long end is actually going to go up because they're going to see what the Fed is doing. The Fed's going to lower the short end of the curve, but they're going to continue to print money into oblivion. You see, we got 34 trillion. We've clicked over now and we're running $1 trillion every quarter. And it's speeding up. It's not slowing down, speeding up. So we're at 34 trillion now. I think we can hit 40 trillion by the end of the year. 38 trillion for sure. Somewhere between 38 and 40 trillion is where we'll probably close out 2024. We're going farther and farther into debt in the Ponzi scheme, if you will. The debt to GDP ratio is going to be increasing as we continue to print this money out of thin air. It's a Ponzi scheme. So we got 34 trillion there. We got 8 trillion on the Fed's balance sheet. I think that's going to go to 10 or 20 trillion. But we have $150 trillion in unfunded liabilities, Social Security and Medicare being the 2 main ones, right? They don't have the money. You see, you paid all that Social Security money in. But the government, what they do, they took it and they spent it. They don't have the money to pay out the recipients. And, the baby boomers, we want to get paid. We paid in all that time, but the government, they're running the Ponzi scheme. And now you millennials are going to have to keep paying because us boomers, we want to get our Social Security money, our Medicare payments, we're going to have health issues. We want you to keep paying in. Okay, so that's the Ponzi scheme the U.S. is running. And they're going to, don't get me wrong, we're not going to default. We're going to print money. You're going to get your Social Security money, but it's not going to be worth anything because inflation is going to take off as we continue to print money into oblivion. Now, let me tell you what keeps me up at night. What keeps me up at night is the fact that we have weaponized the U.S. dollar. We've weaponized it against our enemies. Russia, now our enemies. We took its sanctions and we've frozen all their dollars, right? We're using the U.S. dollar as a weapon. Okay, this was a big mistake, right? Now everybody go, but Mike, we hate those Russians, right? They're bad people, but they have the reserve currency. Look, if we don't like somebody, we can freeze their assets, right? We can weaponize the dollar against any country we don't like. So a lot of countries now are getting together to try to find a way out of the dollar. Now, it's not going to happen overnight, but the BRICS are getting together. You've heard about, right? They're going to try to get what's not a gold standard, but they're going to try to get a currency pegged to the price of gold. Okay, now you'll realize central banks all around the world stockpiling gold. You see, the rest of the world has caught on that what's going on, and they're buying gold. Now, the U.S., they don't want you in gold. You know why? Well, because you have these financial advisors running your 401k plans. They can't make any money by selling you gold. There's no money in it for them, right? If you start stockpiling gold, they don't make any money. So the West, we don't buy gold. We don't want gold. Gold is like the canary in the coal mine. Gold starts taking off, it means the dollar is going to collapse. And the dollar is going to collapse because you know what? We've had this thing called the petrodollar. Now, a lot of people don't understand what the petrodollar is. It goes back to when Kissinger went to the Saudis and they made a deal with them. He says, if you only take the dollar for oil, right? You can only buy oil with dollars. Then we will protect you. We'll use the U.S. military to protect them. Well, you know what? They don't care about that anymore. anymore. The Saudis, they don't really care about us. They're kind of, well, I guess they'd be considered our enemy now. You see, we're their enemy because we're going green, right? Well, if we're going green, that means we're going to cut off all the oil purchases in the world. We're not going to need that oil anymore. We're going green. We got electric vehicles. We got all this stuff. So the Saudis, they don't care about us anymore. And they're going to take any form of payment now for oil, right? The Saudis are going to sell oil in any form or shape that it comes in, right? Now, okay, so they don't care if they take dollars. They're teaming up with Putin. They're teaming up with China for their protection. We can't protect them. We can't even protect our own border. And they know that now, so they're getting away from the U.S. dollar, right? So when people don't need U.S. dollars to buy oil anymore, what happens to those dollars? They're going to come flooding back to the U.S. because nobody's going to want them. Now, I know there's other theories out there. You can look up the milkshake theory where the dollar is going to go to record highs and it's just going to keep going up because debt's financed in dollars. But believe me, this petrodollar is a big issue. When the Saudis no longer want dollars, they're teaming up with the BRICS. When they no longer want dollars, other countries don't need as much dollars. Those dollars are going to flood back to the United States. So the United States, we're going to be printing to pay, so that it's going to raise the dollars, right? And all these dollars are going to be flooding back in. Well, what's going to happen? You're going to see inflation take off like you've never seen it before because the dollar is going to become basically worthless. It's already lost 97% of its purchasing power, but it's going to go down from here. It's going to lose that last 2 or 3% left in it, and it's going to become completely worthless. You're going to see inflation take off. Not the 9% where we were last time. We're going to hit 10. We're going to hit 15. We're going to hit 20. We may go as high as 25, 30%. I mean, inflation is just going to explode, and you're going to start to see this towards the end of this year. Could happen sooner, but 2024, towards the end of the year, that inflation number is going to be spiking up. It's going to be going really high. Well, what does that mean is going to happen? Well, it means they're going to be, well, you got 30% inflation, right? I mean, the Fed's going to do something. They're going to have to raise rates, right? Well, they may not. They may just ignore it. They may just wave the white flag. Inflation wins. Okay, so the Fed might keep the short end of the curve low, but the long end of the curve, when they see inflation running 20, 30%, that long end is going to go up to 20 or 30% or beyond. And what does that do? What does that do? Well, it brings mortgage rates right along with it. You get mortgage rates up at 20%. Can you imagine the home value is going to be? Your home value, 50% is going to be nothing. Now, I know this is scary stuff. I know it's a Friday, but this is what's going on in the world. Look, we going green. Saudis don't want us to go green. They don't want anything to do with us anymore. They're saying, hey, Putin, fly over here. We'll have a meeting. Hey, China, fly over here. We'll have a meeting. Protect us. Give us protection from those bad guys over in the United States, and we'll take any form of currency you guys want. Maybe we'll even outlaw dollars that we don't take dollars anymore. So the dollars are going to come flying back into the United States. All right. And once again, very inflationary. It's going to send the long end of the curve. See, the short end, the Fed's going to ignore this because they're going to have to ignore this so that the government can pay its bills. So they might hold that short end down there at 5%, but that long end is just going to reinvert, and there's going to be some really, really bad stuff happening. Maybe the short end at 5% and the long ends up here at 20% along with your mortgage rates, which is going to send your houses down by 50%. This is a little bit scary for some people. I know I'll get the haters in the comments. Mike, you've lost your mind today. You just can't be true. None of this can really be happening. Look it. Here's the thing that's also scares me is the banking system. You got to get out there and get this book. It's free. It's called The Great Taking. TheGreatTaking.com. You can get the book for free, right? Okay, now what happened in 2009? The Dodd-Frank passed, right? You can Google Dodd-Frank. Okay, it's written right in there that the banks are going to have bail-ins. They're going to have bail-ins. What does that mean? It means you got $50,000 in the bank. You wake up tomorrow morning, it's changed to $25,000. They bailed in. You lost half your money. You may lose all your money. But this is how the banks are going to continue to be solvent. You see, the FDIC, Mike, the FDIC insures us to $250,000. look, the FDIC's got 128 billion to insure 18 trillion. 128 billion, 18 trillion. They're not going to save you. They're not going to save you. I'm telling you, there's going to be bail-ins. Dodd-Frank, Google it, ask if it, ask AI, ask AI. AI, does Dodd-Frank say they can do bail-ins? Written right into the law. They're going to bail out the banks with your money. Bail-ins. Banks make me very nervous. The book is called The Great Taking. I recommend you get it. It's free. Open up your eyes for you non-believers out there. Get thegreattaking.com. You can get the book for free. Okay, so we got this problem now, right? We've got a problem that the U.S. is running a Ponzi scheme, 150 trillion unfunded, throw on another 40 trillion. We're at $200 trillion. Never going to get repaid, right? We're going to print currency, right? The Saudis are going to stop taking dollars. Okay, the dollars flood back into the U.S., sends rates spiking. What does that do to mortgage rates? Spikes right up with them. What does that do to your house prices? Brings them all down, brings the stock market crashing down. Yeah, rich people are going to become poor. It's kind of sad. If you have nothing to lose, maybe you're in a lot better shape than people who's it hurt. It's going to hurt the retired people with their savings, right? They got it all in the markets. They got it all in their real estate. Going to come crashing down. It's a little bit scary. How do you protect yourself? I'm not sure you can. There's no safe place to be. I like silver. I like gold. I like platinum. Those things should be booming when this inflation takes off. This is just my take. I know it's Friday. I know that I didn't mean to scare everybody. But if you like this stuff, give me the thumbs up. You really like it, punch the subscribe button. Why not? I'm Tall Mike. Get out there, everybody. Have a great weekend. Want to talk to you again next week. Bye-bye now.